The local economy is officially out of recession. Gross domestic product grew by 2.2% in the third quarter on a quarter-on-quarter basis. It follows the economy contracting in the first and second quarters, which by definition meant it was in recession. The main drivers of the growth included manufacturing, transport and the finance sectors. The latest outcome actually beat expectations. While most economists did expect that South Africa would come out of a recession, the average growth expectation was 1.6% for the third quarter. On a year-on-year basis, economic growth rose by 0.5%. On the release of the news, the rand firmed by as much as 10 cents against the US dollar. The currency had been firming slightly ahead of the news in anticipation of the positive outcome. Well, for more on the GDP number, we cross to our markets anchor, Arabile Gumede, who's standing by for us at the JSE. Arabile, this is obviously very good news. The market had expected that we'd come out of recession, but that print was much better than expected.
Yeah, certainly a much better picture. Of course, Nompumelelo, 1.9%, between 1.6 and 1.9% was the expectation, depending, of course, on which unit you sort of used. 2.2% is really a good number when you compare it to exactly how things have fared. Of course, the one sector which has been in the doldrums for quite some time and continues to be that way is mining, falling a massive 8.8% during the months of July and September. Between the 3 months, of course, it is a massive decline from that front. And one would have hoped that perhaps the likes of the mining charter may begin to come to the fore at some stage and perhaps take that figure into lower negative territory, if not into more positive territory at some stage. So it will be quite interesting to get a sense of where we are exactly. Let's remember, however, that just because we stepped out of a recession here, it doesn't necessarily mean that things are that great for the year. 2.6 negative growth for South Africa in the first quarter, 0.4% as the revised figure for the second quarter, and now 2.2%. According to statistics, we're around 0.7% up for the year, and that is the key element here. How do we ensure that we're at 0.7% and even further above 1%? Nombu.
Arabile, one of the driving factors or positive factors was the finance sector, and of course the local currency has firmed up on the back of that positive news. But I don't see that the financial counters have really reacted positively in response to this.
I suppose they'll take the information in a little bit later on, right, Nompu? That is perhaps going to be some sort of gradual inclination. Let's remember that the banking sector itself just faces a tough economy all round. And yes, despite having done fairly well considering the circumstances, they are, however, certainly struggling in an economy where consumers are faced with a whole host of competitors in this segment. At the same time, interest rates have recently just gone up. So things aren't necessarily that great in that sector. And we will continue to perhaps find that things are naturally difficult. How we translate, however, this growth from that finance sector into the remainder of the fourth quarter is going to be the key impact and the key interest area here. Consumer confidence isn't that high, and the likes of business confidence isn't that high either, and neither is construction confidence at the same time. So things are bound to get a whole lot more difficult from here on in, and one can only hope that as the rand now gets better to around 13 rand 56 against the US dollar, it certainly is going to paint a better picture for South Africa. Let's get back onto some of those data. As you said, even manufacturing going up 7.5%, so contributing around 0.9%, almost 1 percentage point. So manufacturing, they're doing really well. That PMI number clearly indicative of this.
Arabile, in terms of the local currency, even regardless of the GDP figure that's come out, it's been doing quite well relative to other emerging market currencies. What's the backstory to that? Is that all to do with external factors like the US dollar, or is there better sentiment around South Africa?
No, it certainly has been a little bit of weakness coming out of the United States. Let's remember that the oil story had affected them for quite some time, so they wanted lower prices when it comes to fuel, but sadly they're going to get a little bit higher when it comes to that fuel price, now ranging at around just above $60 a barrel. And of course, we had seen it around $58 a barrel. So that has continued to hurt them a little bit, because the United States, of course, is a massive player when it comes to that to oil as well in the market. Of course, we saw Russia and Saudi Arabia Arabia agreed to now cut production, which then means that the price of oil goes a little bit higher, and the United States certainly will not be liking that. At the same time, we saw Donald Trump perhaps lambasting the Federal Reserve Chair Jerome Powell as well, not so long ago, saying that the increase in interest rates should not be happening. And of course, Jerome Powell then toning down ever somewhat, saying that the gradual increase may indeed happen, but perhaps over a longer period of time. So a lot more coming out from there. The EM story, the emerging market story, has been a whole lot better. The likes of Argentina's peso, South Africa's rand, really doing well and rallying now. As you said, right now 13.56 against the US dollar. It's a far cry from that 15 rand we almost had around 3 months ago.
One last thing, Arabile, you talk about the lambasting of a central bank, in this case, Donald Trump lambasting the US Fed Reserve. What have you been hearing in terms of analyst reaction to the fact that the Reserve Bank raised interest rates last week? Because having interacted with a few analysts myself, they seem to think that it was a wrong call, given the fact that their inflation forecast was actually less than their previous forecast.
Yeah, you're not alone, Nombu. I think some of the analysts I've spoken to as well have said the same thing, that perhaps the South African Reserve Bank is trying to foreshadow or even try to tell the future in some ways by reckoning that things will get worse before they get any better. If that's really the case, then one has to ask themselves is how do they see that into the crystal ball when things like fuel prices were said to go down, even as that MPC decision was made. And let's consider that South Africa was trying to get growth going as well. Inflation projections themselves were set to go even lower. Things had gotten better according to their message, and yet they hadn't changed the growth forecast any lower. So clearly then the message from them was they're just scared of inflation going a little too high. And it does, however, seem that that 4.5% midpoint of the 3 to 6% bracket that government had put in place for them as a target seems to be the one they're more concerned with. So it must really hit that 4.5% mark. That's the sentiment and the element we're getting out of this. Perhaps it is different, but we'll only be able to tell again in January.
All right, Arabile, we'll catch up with you in less than an hour or so. That's my colleague Arabile Gumede reporting from the JSE.